It's like the Lakers versus the Bulls and the Netherlands versus Germany or America versus China. In this video I'm going to explain exactly what bear and bull markets are and why it can help you make your investment decisions. My name is Rico Richardson. Subscribe if you want to learn how to retire early, and let's start breaking down this topic. The news about cryptocurrency is full with terms like bear and bull markets, and if you're new to this space it might be very confusing for you. And the things I will explain in this video also applies to the regular stock market, because bear and bull markets happen in the stock markets just as well as they do in the crypto space, and it kind of defines the market sentiment and determines whether or not you should go long or go short. Now keep in mind though, it's not as easy as it may look, because to understand betting against or in favor of the market, we'll need to start at the basics. So who came up with these names? Now, after some digging around online, most sources say that there isn't really a clear reason why we call it a bull or bear market. Now, one thing that did keep popping up was the suggestion that it has to do with the fact that bears swipe their paws downwards when attacking their prey or defending themselves, while bulls, they just bring up the horns like that upwards when they attack. Now let's go back to the 19th century, because the now extinct California grizzly bears were hunted to fight with bulls. Now the bear baiting was introduced by the Spanish conquistadors, but the sport itself is as old as ancient Rome. Now they would chain up a bear and unleash small dogs on it to get the bear in the mood, and the bear would be shackled on its ankles, and the bear and bull would be tied together with the rope short enough to make sure that they would keep each other company. Now the bull would proceed to charge the bear and try to throw him on the horns, while the bear would stand on its hind legs, grabbing the head of the bull and biting its neck. It's pretty disturbing and unthinkable in today's day and age, but it does make sense that this is how the term bear and bull markets have originated, as far as I'm concerned. Right now you know that when the market goes down, we call it a bear market, and when the market goes up, we call it a bull market. But it's not as simple as that, because we need to consider some outbreaks and corrections in the equation as well. Because markets basically have three trends. They either go down, go up, or they are consolidating. And consolidation means that the market is moving sideways while not showing a lot of volatility in the price. So the bottom point of the line is called the support, and that's where the bulls try to defend the price the most when the bears are into play, which are usually shorting the market. Now the resistance level is where the bulls have to fight against the bears. Now the bulls want the price to break out again so that the market sentiment turns bullish, because that will make them a lot of money. Now in a bullish market, traders tend to go long, which means that they are anticipating on the market going up. Now going short means that you expect the price to drop. So when you're bearish, you expect lower highs and lower lows, and on the contrary, if you're bullish, you expect higher lows and higher highs. Now let's grab the Bitcoin chart over the past few weeks and look at some patterns. So this is the BTC USDT chart on Binance. I drew a couple of lines, so 1, 2, 3, 4, 5 lines, just to explain to you a little bit about what I'm trying to tell you. I'm going to start with this bottom one. Let's call this the support area. That means that if the price drops down to here, this should be a good entry point. I'm not a financial advisor, but let me explain to you why. Because it has been retested once, twice, 3 times, 4 times, 5 times, 6 times, let's say 7 times, and it just bounces back up. Then I drew 2 resistance levels. So the first one is over here, and the second one is over there. So this is around 35,000, and this is set on around 58,600. And that has to do with the fact that these are levels that are being tested once. Let me zoom in just a little bit for you. So we've got 1, 2, let's say 3, 4, 5 times that it has been, well, maybe 6 times that it has been tested. And the same goes for here. We've got 1, 2, 3, 4, 5, 6, well, a lot of times, 7 times. That means that every time we're hitting this price level, something might happen. So we're either breaking down and we need to find new support. If you look at here, and I'm using the daily chart just to showcase you this, or we're going to break the resistance level, and the resistance level will turn into support. So here we're breaking it out, then it's support right here. So let me show you real quick what I mean. So we're breaking out of the support level. We're moving up, downwards, a little bit of consolidation for 3 days. Then we've got another jump. And then let's say if this was a test area, we're getting rejected and we're going back to the support level. We're dumping beneath it, and that means we need to find a new support level in this chart. So that's usually how it works a little bit. And then, like I said, you need higher highs and lower lows. So that's why I drew this line and I drew this one. So this is the top one. This is the bottom one. And if you do that on the long term, you might check and see where the price action is going to be. So between these lines, I think it might be something like either like this going up, and then we're going to retest it here again. Or what's going to happen is we're going to get rejected, and then we need to test this level again. Now, like I said, I'm not a financial advisor, but I wanted to make this to give you a little bit of an example on how you can look at charts. The most important thing to remember when you draw these lines is that you need to make sure that they cross a couple of candles. Same goes over here. That's why I made this long one, because they are going to hit it once, twice, 3 times, like I said, a lot of times. So there's 2 things in this candle that you can see. You've got some wicks that I need to tell you about as well. So we're dropping down here. We're in a downtrend for a couple of days now. We're dropping down here, and then we see this wick. This is the lowest point Bitcoin gets before it bounces back up, and then we've got another wick on the top, and then usually something or some sideways action is going to happen. Now these wicks are either due to high sell-offs or buys or traders getting liquidated, or it can be anything, but usually when we bounce back up pretty strong like here, that means that there's a lot of purchases going on and a lot of people buying in at this low price. So they either had a limit order set here, which has been executed once it's hit this level, or some people just bought somewhere around here. And the same goes if we go down, a lot of positions might be liquidated. So let's say the price is dropping to here, and then people don't have enough margin, and then all those positions get liquidated, then the price drops again. And then we need to find new support and we need to find new resistance. So that's a little basic explanation on how these lines work and how you can look at the charts. So you see, we have trends, but we have some wicks as well. And we also have breakouts on either side of the trend line. Do you still follow? I sure hope so. And being bearish means that you expect the market to drop, and being bullish means that you're expecting the market go up. So when trading, you'll either go short in a bear market and go long in an expected bull market. Now personally, I'm not sure what type of market we are right now, but my own personal sentiment is that we're still in a bull market but have to deal with a lot of fear, uncertainty and doubt. Now I'm holding my assets and I only invest what I can miss. I don't trade with borrowed money, which is called margin trading, but instead I just buy the coins like you would with company stocks. Now please keep in mind though, I'm not a financial advisor and none of this is financial advice, but I sure hope that this brought some knowledge to you regarding the bear and bull markets. That's it for this video. My name is Currencies. Thank you for watching and until next time, doei!